Okay, so let's look at part A of the required. It says, refer to part A. Lindiwe is preparing to submit her first provisional tax payment for the 2022 year of assessment. So if the tax year for 2022 runs from the 1st of March 2021 to the 28th of February 2022, remember the first provisional tax payment is 6 months into the year, so 31 August 2021. Make sure that you don't say year 2022. Common mistake students make. Lindiwe wishes to pay the minimum amount of provisional tax at this point in time. What must that be? That's the basic amount. She also wishes to avoid any penalties. Now, the only penalty that you can have for the first provisional is the late payment penalty. So to avoid that, she just needs to make sure that she pays by the 31st of August. She estimates that the taxable income for the 2022 year will be 1.1 million. So she thinks she's going to earn 1.1 million, but she wants to pay the minimum amount. Can't be less than the basic amount. The only way it can be less than the basic is if you've done a proper calculation and you can prove to SARS why I believe it will be less than the basic. Discuss what is required by Lindiwe to meet her obligations. Support your answer with calculations and explanations or references to the Act. You're also required to calculate the first provisional tax payment. PK Designs withheld a total of 107,000 rands in employees' tax from a remuneration for the first 6 months of the year. And I just remind you that you'll have to use the tax tables at the start of this question. Okay, so let's talk about it. So what do we have to answer? We have to do the calculation. We have to discuss what she needs to do to meet her obligations. And what does she want to do? She wants to pay the minimum amount and she wants to avoid any penalties. So you have to talk about the late payment. So basically all you say, to avoid penalties, she needs to pay it on the time. So let's actually answer it here. So to avoid late payment penalty, she must pay latest 31 August 2021. The minimum amount is the basic amount determined as follows. Okay, so how do we determine what the basic amount is? We go to our question, we go to the 2021 tax year. You always start with the latest tax year. Now that tax year needs to have been submitted 14 days or more before the date of our provisional payment. Our first provisional payment on the 31st of August. This is submitted after that, so we can't use that. So we'll say 2021 cannot be used as not assessed at least 14 days before payment date, or 31 August 2021. 2020 is our next one. Can we use this one? Is the 6th of September 2020 14 days or more before the 31st of August 2021? Yes, it is. So can we use it? Yes, we can use it. This includes the taxable capital gain. Remember, the capital gain must be excluded for the basic amount. So, can use this as assessed more than 14 days, so 14 days or more before 31 August. Now remember, there's a rule about the 8% that you have to increase it by 8% if the tax year, so I'm going to actually just quickly address it. We do not, or does not need to adjust by 8%, or do we? Let's see. Well, let's actually do it like this. Year end used is 28 Feb 2020. Submission or first provisional payment is 31 August 2021. Now, you have to look at the difference between those two periods and those two dates. And if that is more than 18 months, then we have to adjust it by 8%. So in this case, as there is not more, it must be more. It's exactly 18 months this. Then 18 months difference. No need to adjust by 8%. So thus, the basic amount is the taxable income less the taxable capital gain. The taxable income is 950, taxable capital gain, 920, taxable capital gain is 65. $855,000. Okay, so that is our basic amount that we have to use. So, calculation, tax per our tax tables. So, our tax per our tax tables, so we just make that a little clearer, 855. We go to our tax tables, so which ones are the relevant ones which are given to you guys. 855, we're in this tax bracket. So it's 208,732 plus 41%, which exceeds 710,000. So what was that? 208,732, 208,732 plus 41% of the amount 855, which exceeds in this case 710. To 68182. From that we deduct our primary rebate, okay, whatever that amount might be. In this case I've given you the amount to use as 14,112. So this gives us tax of 254,070. That is for a full year. So thus for first 6 months is the 254,070 divided by 2, 127,035. So that's the tax we have to pay for the first 6 months, but we've already paid pay as you earn, which they give us in the question or in the required as being 107,000 rands. So our first provisional tax payment is 20035. Okay, let's go into number B. Refer to part A. Lindiwe has performed the calculation of anticipated taxable income for the 2022 year of assessment, and it amounts to 1,204,713. Lindiwe is preparing to pay her second provisional tax payment on the 1st of March 2022. Now, the second provisional tax payment must be paid on the 28th of February 2022. She wants to pay it over a year. Now, if she does that, immediately you need to know that there is going to be a late penalty of 10% of the amount. She wishes to base a provisional tax payment on the basic amount. Okay, now, the one thing that you need to remember here is to avoid underestimation. If her taxable income, and that's the actual taxable income for the year, as it exceeds 1 million, it cannot be less than 80% of the actual. If it does not exceed 1 mil, then you could use the lower of the basic amount or 90% of actual. Remember, that's the rule. But that's only if your taxable income for the year, your actual taxable income, is less than $1 million. So that option is not available. For her to avoid penalties, she can't submit anything less than 80%, otherwise she will have a penalty. Okay, so discuss any concerns that you may have with Lindiwe's plans. You are required to support your answer of calculations. You may assume that the first provisional was 20,035 and that there was 215,000 withheld in terms of provisional employee tax. Sorry, so let's quickly talk about it. So, what are my concerns? My concerns in this case is the following concerns. If she pays on 1 March 2022, there will be a 10% late penalty, as she cannot submit plus pay later than 28 February 2022. Okay. Underestimation. She wants to base, or let's actually say it like this: the minimum amount she can use to avoid underestimation penalty is 1204713, so that taxable income 1204713 times 80%. So is 963,770. That is the minimum amount that she can use. Now, what is the basic amount in this case? Now remember, in the previous question, part A, we already calculated the basic amount. But guys, remember, the basic amount changes every single time, or you should reconsider it every single time, because you have to follow the principles determining it. We couldn't use the 2021 amount when we did the first provisional tax payment because it was not assessed 14 days or more before our payment. But now if we look at it, the 2021 tax year, we're now comparing it to 28 Feb 2022. In reality, actually, it's actually 1 March 2022. She wants to submit it then. But I want you to see that no matter 1 March or 28 February, this 15th of September is 14 days or more before that. So we will have to use the 2021 amount. Okay, when they say the tax income was 950, had taxable capital gain of 5,000. So basic amount 2021 year. We can use this as it was received 14 days or more before 28 February 2022. So thus the basic amount is 950,000 minus the 50,000 taxable capital gain, so 900,000. This is what the taxpayer wants to use. So the taxpayer wants to use 900,000. The minimum amount that you should use to avoid penalties is 963,770. But this required tells us that she is going to use the basic amount. And you have to tell them what your concerns are. Supportive calculations. So, let's say to her what our concerns are. So, the tax payable on 900,000 will be So we go to our tax tables. So 900,000. Where's the tax table that we're going to use? It's over here again. So it's 208,732 plus 41% of the amount, which exceeds 710. So 208, sorry, what's the amount? 732 plus 41% of the amount, 900,000, which exceeds 710,000. Okay, 286,632. The primary rebate from that was that amount that we had there, 14,112. 272,520. Okay, from that we deduct less our prepaid taxes, and there is pay as you earn, and there is the first provisional. The pay as you earn amount is 215, and they tell us the first provisional was 20,035. So 215, 20,035. Okay, so 272 minus 215, 20,035 gives us 37485. 37485. This is our second provisional. I'm going to say based on the basic amount. So understand now, the taxpayer is going to base it on the basic amount, and the basic amount is going to require to pay 37485. This question asks us what are our concerns about that, and our concern is that there's an underestimation. Okay, so I'm going to say C below for calc. Right, so after she's now calculated that, I'm just going to change color here to just distinguish. So underestimation penalty. The minimum amount, the minimum estimate is 80% of actual taxable income, which we calculated above. I'm just putting it down again, 963,770. 963,770. As the taxpayer pays on the basic amount of 900,000, there will be an underestimation. This penalty, how do we calculate it? Is 20% of the difference between what was actually paid and the minimum that should have been paid. Okay, so how do we then calculate it? So thus, tax that should be paid. So what would be the tax if she pays 960 or estimates the taxable income to be 963,770? Okay, so we repeat what we've done. We go to the tax per tables. So So it's 208,732 plus 41% of the amount which exceeds 710. So 208, I keep forgetting, 732 plus 41% of the amount, 963,770, which exceeds 710. Okay, gives us 312,778. From that, we deduct our primary rebate, which I remember is 14,112. For some reason, I'm going to remember that. 312,778 minus 14,112 gives us 298,666. Less prepaid taxes. So there's pay as you earn, and there is the first provisional. Remember we used it above, so it's just 215 and 20035 from the question. 215 and 20035. 63631. So this is the second provisional based on the minimum. Okay, so now let's just change it. The underestimation penalty is 20% of the difference. So it will be, here, let's do it like this. Taxpayers estimate minimum estimate. And guys, you'll see I'm just expressing it a little bit different from what your solution shows here, just to show you the two different approaches, or in case you've studied it differently. The way I do it in the solution is a little bit quicker, but the pay as you earn in both instances is the same. Sorry, it says 215. 215, 215. The first provisional in both instances is the same, 20,035. The difference is the second. So the second, she will pay 37,485. And the minimum she should pay is 63,631. Okay, so the total there for this is, if I add it all up, is 272,520 and 298,666. So the difference between those two is 298,666 minus 272,520, which is 26,146. So thus 20% penalty is 26,146 times 20%. Okay, 5,229. That's the total penalty. But from this, you will deduct if there is any less late payment penalty. Okay, now in this case, and I didn't discuss it earlier, remember we mentioned here and we said the concerns is if you pay it on the 1st of March, there will be a 10% late payment penalty. Right. I'm going to just make a comment here. The late penalty is 10% times whatever she actually paid, 37,485. 37,485. Okay, so 3749, just round it up. Right, so The late penalty is 20% of the amount, the difference between what she should have paid and what was actually paid, the total taxes. You could see also that it's the difference between these two amounts, the second provisional. That's what I do in the solution. It's a bit quicker. Less the late payment penalty. The reason why they're trying to do that is she will always pay the late payment penalty if she paid late. This is just so she doesn't get basically penalized twice. Okay, so let me just explain. It's because when we're looking at this now, it's just because from an academic perspective, you're not seeing the timing. The reality is how it would work. This 20% underestimation penalty, they'll only figure out months later when she has done her final tax for the year. The late payment penalty will pop out immediately. The moment she doesn't pay it on the 28th of February 2022, they'll calculate that. This late payment penalty will only be calculated months later in reality, timing-wise, when they know what your provisional tax is for the year, or what it should have been, and then they will do this calculation. From an academic perspective, we obviously can't do it in that way. That's why they just provide you the information from the start. They give you all of the taxable income and all of the information from the start. But in reality, the taxpayer doesn't have it. So let me explain to you just what I mean. If we look at the question like this, in reality, if this was real life, the taxpayer, when they do Part A, would only have the information for Part A available when they do the first and second provisional tax payment. Part B, they'll only know later when they do their tax return for the year. They'll know, and then they'll be able to work out what their actual taxable income was for the year. So the late payment penalty usually happens in reality, in real life, a bit before the underestimation penalty. Okay, but what I want to show you now is this late payment penalty here, or the total penalty she will pay is 5229. Okay, so let's look at it. So that 5229 is the total penalty she will pay. That's broken down into 3749, which is the late payment penalty, and 1480, which is the underestimation. Okay, so don't forget that, guys. You don't get both of those penalties. You don't get 5229 and 3749. They get taken into account.